It's my little daily strat, right? So you see these pink lines on my chart, right? These two and this one, right? These are the open, high, low, close. Those pink lines are the open, high, low, close of the previous day's candles of yesterday's daily candle. All right, this for you, Vanessa, and everyone else too, but Vanessa asked. So those are my targets for today. I have a video on my channel. It's called Finding Your NQ Daily Levels. Go there and watch the video. It'll explain to you exactly what these are and why I have them on my chart. And how I trade with them, excuse me. So those are my targets, right? All right, so let's see here, where are we? Let me go to the 1 minute. So strategy. All right, market open was, where was it? Right here. Here. All right, this is market open. With this strategy, I have to have what's called market structure shift, meaning I have to have a close above. This is in once New York session starts. So I'm starting to look for my strategy between like 628, 629, right? Sometimes it can start setting up early, right? So I have two targets up top that are closer to price. I got these targets down here. Now, a couple of things. Overnight bias was bullish. Not married to that. It's just something I'm keeping in mind, right? So I got that in mind, right? I know my closer targets are here, right? So got that in mind. Now, I do know I have a target here, but at the end of the day, can price come down here? Absolutely it can. But this is the closer target, and also considering the overnight bias, right? These are all the things that I'm computing in my head, okay? So I got the first step of my strat. I had market structure shift. Market structure shift meaning a close, once market opens, a close above the previous high, which is this is the previous high, or previous low, right? So because this target was close, or it's closer to price, overnight bias, right? Market structure shift, I'm like, okay, that means that my setup, this strategy is setting up for a long, right? For a buy. So I have market structure shift. The next thing that I'm waiting on after market structure shift is a fair value gap. I need a fair value gap to form. That's the second step of this strategy. Now, the fair value gap, actually, where was it? I'm trying to see if there was one before. Okay, so the first fair value gap that formed was, I'll show you right now. It was right here. No, I'm sorry. It was right here. Yes, it was right here. It was right here. Right here. So it was the first fair value gap formed. Now, my entry could have been here, right? But I didn't take that. You know why? Remember, we had news at 9:45, right? And one news outlet reported that it was red folder. Forex Factory, another news outlet, reported that it was orange folder. Who's right, who's wrong? I don't know. I got that in my brain, right? So if it's red folder, I definitely don't want to mess with it. Even orange folder, really don't want to really mess with it either. But red folder for sure is like definitely hands off. Orange folder, it's like hit or miss. But even still with orange folder, I treat orange folder like red folder. I do. So I didn't place my entry. So I waited, right? So then we had another market structure shift right here, right? Which is what? A candle close above the most previous swing high. Or low, but in this case, previous swing high. Market structure shift right here. So there was already a fair value gap that had another fair value gap that had formed right here. Right? And that's where I placed my entry. So the way it works for this strategy, you have to have market structure shift, meaning a close above the previous swing high or previous swing low. We already had that, right? And then I saw this form, this fair value gap form, and then we had market structure shift again. So I placed my entry here, and actually this candle came down. I placed my entry right above the fair value gap here. And this candle came down, tapped into the fair value gap, which tapped me into the trade. My stop loss was here at this previous swing low. And I'm in the trade. Now, had I looked left, if I was paying attention, what I was talking to y'all about, I would have trimmed my position at CE, consequent encroachment, meaning the middle of this fair value gap, which would have been right about, I kind of eye it, right? I eye it, right? Which would have been about, I say about here, right? I'd have set my TP right there. Let me just change this color. I'll change it to purple. All right, so this purple line would have been my TP. I was in on 5 micros. I would have set my limit order right here for 4 micros, right? And as you see, price would have tapped right into CE where it did. And 4 of those contracts would have been trimmed off my position, right? So I would have banked those 4 contracts. Boom, that money's in the account, that money's safe. I would have been in on 1 more micro, and I would have moved my stop loss above entry, which entry was here. I'd have moved my stop loss right above entry, and I'd have been in on that 1 micro. So that stop loss would have been for that 1 micro that's left, that's running, my runner. I'd have moved my stop loss, like I said, right above entry, which would be right above this purple box, because remember, entry would be here. I'd have moved that, I like to move it just a little bit above entry to give a little bit of space, something you always want to do in the event that price comes back to take you out of here, to take you out of that 1 runner, hits your stop loss. At least you leave a little bit of space between your entry and your stop loss. That'll be a little bit of bread. So you'll still make a little bit of money on that that one last micro runner that I had. And it would have pay for my fees, right? So once price tapped in right here and hit my 4 contracts and banked those, I'm really, if you break it down, I'm in a free trade now, right? Because that 1 runner is running, I banked 4 contracts, and then I moved my stop loss above my entry price. So I'm in a free trade, literally. So even if the trade comes against me, like as I stated, I'm still gonna make a little bit of money off that trade. Off that 1 micro runner. And it would be just enough to take care of my fees and probably like $30 or something, 20, $30, right? So that was my ideology on that trade. And had I ran it that way, if I paid attention, my trade would have went the way it was supposed to go. But because, of course, I didn't pay attention, there it is.